Welcome to the Excluto podcast. I'm Vijay Rajendran, and I'm here as your host today. We're excited for this conversation that we get to have today with Gokul Sudhakaran, where we're going to learn more about him and the work that he's doing at Mintwit. Gokul, welcome to the podcast.
Uh, Pleasure is all mine, Vijay. Thanks for having me.
We're delighted to come together and talk about some of the really interesting conversations and topics that we can dig into regarding to how we can navigate the wealth landscape. So before I launch into that, a reminder is that while we'll be talking about the topic of wealth and wealth management, nothing we're discussing today is specifically investment advice and is just for educational purposes. I think most important is to understand Gokul better and his background and professional journey. Gokul, can you tell us a little bit about your experience?
Sure, Vijay. So, um, so I belong to basically a middle class family, brought up in Kanpur, Uttar Pradesh, and uh, but the roots are from down south in Kerala. Mm, Graduated in computer science and engineering, but never really pursued that line. Moved straight into management MBA in marketing. Was lucky to get into a top tier institute, made some great friends, had an amazing learning experience there. And by happenstance, I got into the wealth management industry. If I have to put it that way, it was never planned. Uh, but I really have been enjoying the last decade plus that I have, been in this space. The industry has grown multifold in that point in time. Lot of learning experience. I was fortunate enough to work in companies like ICICI Bank and Motilal Oswal Private Wealth previously. Superb learning grounds for understanding the landscape, clients, the kind of requirements that they have, the kind of solutions that can be provided to them. So fully entrenched in the HNI Ultra HNI ecosystem. Um, and yeah so have understood the domain and the expertise that is requirement to navigate the challenging landscape that comes with managing private investments and money for individuals. So last year decided to make things a little bit more challenging for myself and started Mintwit Financial Services. That's where I am at this point in time.
Superb. Thank you for that summary. And certainly you have a wealth of experience, no pun intended, that helps you as an expert of this landscape and will help us to understand what it's about. Maybe we can dig a little bit deeper there. You mentioned some words like HNI. There are other abbreviations and acronyms there. UHNI. SFO for single family office. Tell us, what do these key terms mean? Let's start with HNI.
So to begin with, see, HNI, alternate HNIs are basically uh, ways of differentiating clients, individuals, and basis their net worth predominantly. So HNIs are maybe $1 million and above. Alternate HNIs would be, globally speaking, $30 million and above, as having assets worth of that in investments. So, and family offices are basically much larger than that, where uh, you have individuals who are planning for generations, basically, right? They're not looking at it from their own perspective, they're looking at it from the next generation or next to next generation perspective, right? More nuanced, more sophisticated style of investments. And a family office will typically have a team of 4 5 individuals at least managing the entire wealth. So yeah, it typically a differentiation comes from the kind of the total quantum of wealth that is being managed.
That's helpful to understand. Are there any specific definitions that the industry uses?
No, apart from the abbreviation,
There's no like there's no threshold.
threshold is not there per
I
se.
see.
The threshold, in a sense, financially speaking, right? You if you are managing, let's say, 10 crores or 20 crores, having a family office will not make sense for you financially, right?
Right.
So you'll have to have at least 200 crores, 300 crores kind of
Yes.
assets to be managed for that to be making financially viable for you.
That makes
Awesome.
sense. You need a lot of it requires scale.
Okay.
That's great. And then tell us, when you get to these sort of more nuanced, more sophisticated situations, what are some of the important decisions, important issues that start emerging when you go from one tier or one stage to the next?
Okay, so if I have to put it in the major differentiation in terms of value proposition that comes in, the higher sophisticated set of clients typically know what they want to do. Okay, they have the entire asset allocation matrix, everything in place, systems in place. There would be an investment charter, blueprints, everything is aligned. And when you are dealing with them, you have to come with a lot of knowledge, background, give them information that can help them make better decisions based on these key matrices. But more or less, you are just providing them with offerings that can be suitable to their requirement. But when it comes to the lower, when you're starting with HNIs, ultra HNIs, and in that landscape, you basically help them end to end, right? From planning how the asset allocation should be, right? What is their risk appetite? Understanding that, uh, how, what kind of investment suits their requirements, okay? Whether the expected returns are viable vis-a-vis the kind of risk appetite that they are carrying. Okay, so you basically get to do or delve a lot more deeper when it comes to individuals, HNIs and ultra HNIs. Whereas in family offices, those kind of nuances are already taken care of.
Yeah, thanks for explaining that distinction. And I think an important thing you identified is that you have to really tailor the solution. These offerings are not sort of one size fits all. There's a lot of specific needs or requirements that are taken into consideration when someone has a dialogue with you.
Absolutely. So the first step when I, introduce myself or try to understand a particular individual, right, is basically I tend to probe them a lot. I try to understand their, emotional psyche, their background, and all these aspects play a vital role in understanding that individual and his expectations. If somebody who has made a lot of money through the venture capital space, from the startup ecosystem, the kind of risk appetite that individual will have is totally different from someone who has just, slogged his way from the lower rank and, reached, the top management of a, private company. So the mindsets are totally different of these individuals. Basis which the kind of recommendations that you give, the kind of risk tolerance that they have, you'll have to tailor them. Absolutely, the tailoring has to be basis the individual requirement at any given point in time. And like is the case in any industry, right now, the customization or tailor-made solutions are what people are, opting for. So same is the case in wealth management as well.
for sure. Um, any ways in which you think this uh, this landscape has changed recently?
Yeah, the amount of technology adoption that has happened,
Hmm.
that is, we are a long way to go, but still, uh, the way things are moving out, we are, even the government impetus is superb in this particular landscape. The regulators are coming up with same day delivery on stocks, which is unheard of even in the global, developed economies, right? So basically, you buy a particular stock, you get the delivery the same day. That's the kind of speed of execution that's happening in India at this
Hmm.
point in time. The entire UPI story has made it more interesting and easy for even the retail investors to participate in this ecosystem. So technology-wise, that has been one of the greatest enablers post-COVID that has basically scaled this thing up to where the industry is at this point in time. Another important aspect or change that I believe is happening, or that can have long-term ramifications, so to say, would be on uh, the amount of knowledge that is available online, or the awareness that has come in this particular landscape. Each investor is bombarded with information uh, through podcasts, and Instagram stories,
Yeah,
WhatsApp universities, right? Uh, has its downsides, definitely, right? But if I have to, the goods more than compensate for the bads because of this, because of what is happening. So yeah, the awareness has grown up multifold. The risk appetite has increased dramatically. Somebody who started when I started my career 15 years back, right? I know the kind of clients I'm used to meet, the kind of risk appetite. I could not even dare to speak about venture capital to them, right? They will be like, okay, please, tata, bye bye, see you. So, that kind of mindset was never there because they
yeah.
had never seen that kind of wealth being generated in the first place. Okay.
Hmm.
Now, over the last decade, the amount of unicorns that have come in, the amount of people who have benefited because of those that tremendous journey, right? So people have gotten a better understanding of this, and the younger generation, is more risk taking at any given point in time. They are not like shying away from the market or from a particular asset class because that it is too risky. They are looking at it from an overall portfolio perspective, whether this is the kind of risk that I would be willing to take, and uh, I can take whether I can take this chance or not, and whether it aligns with my objectives.
Yeah. So that's an important transition into another topic, which is diversification, because when you have a portfolio, that is one of the approaches to portfolio construction. And tell us more about portfolios through this lens of diversification.
Okay, so I have a contra opinion on this. So and that's something that when I started my journey, I was like, diversification is so important that you should not have all eggs in the same basket. You should diversify across asset classes. You should have gold, right? And then I started meeting clients. Okay, and it changed my perspective entirely. I was so uh, I have a client of mine who is like touching 90 at this point in time, 100% equity, no other asset class, and you cannot make him invest in anything else. Okay. On the contrary, I have another, business owner who am I managing, who whose turnover is more than 1,000 crores. Okay, he's running that kind of a company, but he will not touch equity. He will be in the safest asset class possible. Okay. So what I'm trying to say is, um, you know, uh, what I'm trying to say is, at any given point in time, right, both of them are right from their own perspective, right? One is looking at, one is in his 90s. He knows that this is not the money that he's going to savor in his lifetime. This is either this is going to go to the next generation, more likely next to next generation. So he can take that kind of a risk on the portfolio and can be 100% equity, right? On the other hand, the business owner is also right. He's making 15-20% in his company by investing in his company, which is a risky business itself. Correct. So he wants whatever he is earning to be in the safest asset class. So it's not one, there is no one size fits all. Okay, but having said that, uh, if the client, whenever I meet clients, I always talk about diversification in the context of the risk reward ratio that they are uh, trying to envisage
Mhm.
by investing. So, if I have to put it this way, there is an importance of having gold as an asset class in your portfolio. So is there a requirement of having debt in the portfolio. So is there a requirement of having private equity, venture credit, private, uh, uh, you know, private credit funds in the portfolio, right? There is a new asset class like InvITs and REITs, which are pretty common, I believe, in developed markets, yeah, like US. But in India, it is still at a very nascent stage, and there are people are experimenting and trying to take allocations there as well. Right. So whenever I approach a particular client, I typically, like I said, tailor-made solutions to the individual requirement, trying to understand the risk appetite, and how asset allocation can help them mitigate the overall downside in the portfolio. That's the you know important aspect that I typically try to convey to my clients. uh, Whenever you're looking at asset allocation, don't look at it from a purely only diversification perspective. Look at it from the holistic portfolio approach. What is the kind of protection it is going to bring you? What is the kind of correlation the asset classes have? Okay, lower
Mhm.
correlation basically provides cushion when one asset class does not do well, and um the allocation has to be basis the kind of return expectation the client has. You cannot have a 20%, 15%, 20% kind of a return expectation, and not be 70-80% in equity portfolio,
So
right?
something goes down, something else goes up. You're looking for that negative correlation as a way of having a different combination of risks and rewards.
Absolutely,
Yeah.
absolutely. Yeah. So
Um,
that's what the model portfolio theory also teaches us, right? Look at asset allocation. Individual investments can be risky as well, provided they fall under the framework which reduces or which keeps the overall risks at the level that you had fixed.
so you have all these different classes of assets. You mentioned VC. How does venture capital as an asset class, uh, fit into the portfolios of ultra high net worth individuals and high net worth individuals?
So venture capital has started pretty uh, recently. If I have to put it, the acceptance has started in the last 5-7 years only. Before that there were not many takers because of lack of awareness in the first place, and secondly there were not many formal players also available, right? Who provided these opportunities for individuals to take exposures in this market. What has changed in the last 7-8 years is the amount of awareness that has increased through uh, the number of players or unicorns that have come into the kind of wealth that has been generated. So people have gone through that story, have got an understanding of the risks that are involved. So that's why the more acceptance has come in this space. If to give you an example, when I started, we were raising a private equity fund of 500 crores at that point in time. This is in 2015-16. Okay, and it took 1.5-2 years for the fund to reach that number. Okay, last year a fund clocked 4,000 crores in record 6 months time. Right, so
Wow.
that's the kind of story that is happening. So that's the kind of acceptance that people are having in this particular space. A lot of work still needs to be done to educate them, to look at it from a long term horizon, right, make them understand the risks involved. But I think the venture capital space is going to grow at a much faster pace going forward. A lot of activity and government impetus is also there to promote entrepreneurship, which is also helping. And the foreign capital that is flowing into the market is also super. I think India is receiving the highest inflows from foreign countries in terms of investments into the private equity space.
A lot's changed. There's a lot of momentum, a lot of velocity of money here
Right.
going into the space that you described. And you described the amount of capital mobilizing in India.
Mhm.
Have you observed that there is diversification of these VC portfolios into funds that invest outside India?
Uh, yes, to a certain extent,
Mhm.
definitely there is an appetite of, at least on paper, it makes better sense, right, to have exposure across geographies. Correct. But practically, I have found things getting more challenging when you try to invest abroad. First and foremost is the awareness and knowledge about the foreign markets. Is something that is uh, low at this point in time. Also, regulatory wise, the government impetus is not there to move money outside India. Okay, so if you want to remit funds across outside of India, there's a 20% tax that has come in. So that would be that is a big chunk of the money that you are going to move out. So that ways internationally, what I have found, right, is in NRIs or people who have assets in dollar denominations, they are more willing to take exposures in the foreign markets, in the VC space.
I see.
Definitely, yeah.
That's helpful to understand that distinction, some of the friction, as you described, that exists.
If you look at the
Yeah,
diaspora, 30 million, non-resident individuals are there based out of India. 30 million. That is like a small country
yeah,
per se, right? And they have exposures across Silicon Valley. You look at it, so Indians are everywhere. So those are the players who have the understanding of those, that market, and have the wherewithal. Ticket sizes also create a challenge. So at least whatever I have come across, right, when you're investing in foreign markets or foreign funds, the taking exposures or investing in the that landscape, the ticket sizes generally are much high, which an HNI or maybe even an HNI might not be able to afford.
fantastic. Yeah, that's true. There's that adjacent world and opportunities that are available to NRIs in addition to opportunities available to invest in India, but also elsewhere. I'd love to dig into some of your thoughts on what you think is going to happen in the industry. So you mentioned technology has changed things quite a lot, and now there's an awareness of new things particularly by the younger generation. What are some of the differences you see between the younger generation and the older generations, and particularly in many of these family groups? And how, if you could look into the future, what do you think some of the effects of those differences will be?
Oh, yeah. So it's like day and night. That's the kind of stark difference that I'm seeing when it comes to the next generation who is coming into the market. Their level of risk that they are willing to take is multifold higher than what the older generation is willing to do. So I'm not saying that's right or wrong, but the capital that is flowing, or the amount of money that is flowing in higher risky asset classes as is increasing because of this. If just to give you an example, okay, um, on the trends in this particular, and I'm not talking about metro cities in India. Okay, if I if just to give you a broader example of the entire wealth management ecosystem, 50% of the money comes from the top five cities. Okay, if I look at top 20 cities, it will be like 85%, 90% of the total wealth. Okay, but things are changing dramatically. Each, the second tier and the third tier cities are coming up big time in India, and that is something that is exciting me a lot, uh, right? Uh, and that's where I come when I say the risk appetite is increasing. The population there, the younger generation there is willing to take higher risks at this point in time. Okay, to venture out, to give or to fund such ideas, the angel investment groups that have come up in all these tier 2, tier 3 cities, and that has come up post COVID only, right?
Very recent.
Very recent. And second important aspect is the entire digitization of the technology aspect that I was talking about, right, has made it possible for them to work from those locations. Okay, take advantage of the cheaper labor in those areas. Okay, and still be connected, to what's happening in the in a city like Mumbai or Bangalore, which are the hubs. So it's not the constraint that you have to be in these locations is no longer there. I was just so Razorpay is one of the unicorns that has come up with a from a small city like Jaipur. Correct, it's a unicorn now. Correct. There are a lot of I was reading about a semiconductor company based out of Vishakhapatnam. Right? That was out of the blue. It's like a semiconductor manufacturing company. It's based out of Vishakhapatnam. I was like, amazed. Simply, Vishakhapatnam does not showcase in it in the map when you talk about venture capital. Kochi
Yeah.
is coming up big time. Indore has lot of Indore, Surat, Ahmedabad. So many startups are coming. Rather, 50% of the startups that are getting formed are coming up from tier 2, tier 3 cities at this point in time. So yeah, I'm pretty thrilled about this, and what the future unfolds. Lot of, and across, this is not only technology based, right? It's not about a particular industry. It's across industries. Lot of activity happening in the agri tech space as well, right? So the diversification that India provides on the venture capital space is both an opportunity and a challenge, right? Opportunity in the sense you are getting such a wide array of buffet that is available to you to take exposures into. Challenge is like, how do you evaluate them? So that's that's how things are at
Right.
the moment.
And before I ask you how you evaluate them, you mentioned the growth of angel investing post COVID.
Hmm.
For folks that may be listening to this podcast for the first time, uh, tell us what is angel investing and who is an angel?
So angel investors are pretty much people who come in the early stages or fund a particular idea to fruition. Okay, so in a very early stage rather. So if an entrepreneur is trying to, let's say, XYZ product, okay, angel investors are the ones who give him money to realize that dream of his, okay, and invest in the ideation stage itself, and not, and then so the pretty much there is no product or business in place, but you're coming at the earlier stage, so you get the highest benefit if things pan out well.
You're investing very early and so very, at a very low valuation before the business really comes together.
Yeah. So what happens in angel investing, or so you are coming in at a very early stage. Okay. So you basically get, if the company does really well, you are the one who is going to benefit the most in this particular in this particular investment, rather than someone who is coming 5 years down the line when the business has already been set up, there is some profitability that is coming in, the business model is has been formulated. If you come in that particular stage, the valuation would be on a higher side, and the prospect of you making money would be slightly lower than somebody who has taken a risk. So yeah, the risk is extremely high, and the rewards are also proportionately
Very high.
yeah.
Right. So tell us a little about what you're working on now and your vision for Mintwit and some of the things that you're able to do.
So Mintwit was formulated predominantly to serve uh, people across strata and not confining to a particular uh, category. Uh, we want to be a true to name blue label wealth management outfit. We don't want to segregate you know people basis their net worths. We believe that a person who wants to be financially independent is growing at this point in time, uh, HNI or that. So basically, what we are trying to do is provide a secular platform where anybody or everybody can come, try to understand the.
I'm sorry, Gokul. There was some interruption and like kind of like background noise as maybe just after you started discussing Mintwit, and so I don't want to lose anything here. So do you think we can go back and record again, and we'll just edit out that bit with the poor sound from when I ask you, to tell me about Mintwit. So here I'll tee up the question again.
Sure. Shall I start? Yeah.
Gokul, tell us about Mintwit. Tell us about the vision and some of the services that you have.
Right. So we started Mintwit with the vision of providing a common platform for people to come across and invest in the various asset classes that are available in the market. So we did not want to segregate investors in and categorizing them. We were of the opinion that uh, every client is important. The value add that we bring across can help an individual achieve his financial goals and targets, and it should not be constrained to a particular category or strata of investments. So, nothing noble or anything, but just trying our way to basically provide uh, informed decision making for clients and helping individuals achieve their dreams. So most of the times, as wealth manager, we spend in expectation setting, okay, making them understand the risk tolerance, making them uh, helping them not make foolish decisions, and in the process, maybe delivered consistent growth and secular wealth creation journey for them. So that's what we are trying to do and achieve. The services that we provide range from, we typically help in understanding their financial requirements, making goals for them. Um, Also, we provide sophisticated structuring if for HNIs, ultra HNIs as well if there is a requirement. Uh, Overseas investment options, we are catering to that as well through private venture or investing in the stock markets in maybe US or other or other economies. So we are assisting there. Um, Succession planning is something that is a big requirement at this point in time. Not not much awareness is there in the industry at the moment. Uh, Not many people talk about it. 75% of the cases that are fought uh, in the country courts are basically related to family disputes on assets. So trying to mitigate that risk by providing smooth succession planning through will trust creation also. So yeah, end-to-end financial plan depending on the client's requirement, and hopefully will be touching more and more lives in the future.
That's that is very noble in terms of like a purpose that you have. For people who want to get in touch with you or learn more about what you're doing, what's the best way for them to do that?
So we are available on LinkedIn and Twitter. So Mintwit Financial Services is the name of the company, and I am accessible on LinkedIn.
Oh, sorry, your volume went out again when you're about to like say something after how you should get in touch with you. Can I record that one more time? Would that be okay? All right.
Sure.
I don't know if there's any like sensitivity on your keyboard to the sound.
A little bit more closer. Yeah.
Okay. Yeah, it should be fine. All right. So I'll start again in a second. And Gokul, for people who want to learn more about what you're doing and find out how to reach out to you, what should they do?
So Vijay, I am my company platform is available on LinkedIn as well as Twitter. So Mintwit Financial Services is the name of the company. I am also on Twitter and LinkedIn under the handle Gokul Sudhakaran.
Fantastic. Thank you so much. Appreciate this opportunity to dive into the world of wealth management and the changing landscape for investment. And this has definitely been a great exploration of that. So my thanks to my guest today, to Gokul, and for spending the time with us.
Thanks, Vijay. Thanks a lot. This was amazing. Hopefully, we'll be interacting again soon.
For sure. Thank you.
Thank you.